So, why are so many investors talking about NIO stock in 2023? Well, the company's made several announcements for the coming year that has got investors both excited and a little skeptical about NIO stock. That could explain why the stock price kind of jumped to begin the year and then now has come down, trading at around $8.50. That's still lower than the $9.60 it started the year. So, what I'm going to do in this video is go through a question and answer session that NIO's CEO and CFO held with Wall Street investors and try and understand, why is everyone talking about NIO? What's going on with the company? And I think this is going to provide some key insights into that question of why everyone is excited and interested in NIO stock. So the first question comes from Morgan Stanley. Tim asking, is it because, asking about the supply chain, asking, is it because component that still suffered from supply chain constraints? What current vehicle production run rate and how fast could you ramp up on weekly and monthly base into the second quarter? So, what's been going on with electric vehicles and all cars for that matter is that supply chain shortages have really constrained production. Car companies could have sold more cars in 2022 if they had enough supply to meet the robust customer demand. So that was the story for 2022. And Tim from Morgan Stanley wants to know, is that going to be the case for 2023? So the chairman and co-founder CEO William Lee jumps on to say that prevention measures regarding COVID have been lifted, right? China has lifted most of the prevention measures, the lockdowns of COVID starting in January. Well, maybe a little bit before January as well. So currently, NIO believes that the supply of the parts is not the bottleneck for us, is not the bottleneck anymore. So thankfully, supply chain disruptions are not going to hurt NIO in 2023 the way they did in 2022 and 2021. So we're really going to get to see this company ramp up to meet customer demand. So wherever customer demand is, NIO is likely going to be able to meet that. However, the big question is going to become customer demand, and we're going to see that a little bit later in this session. So Tim's second question is, so could you please share some updates regarding how much more contribution from the lower battery cost should we expect this year or in the first half? So he wants to know, is battery costs going to come down and is that going to help NIO's profit margins this year? So the CEO saying, starting from the second quarter of this year, we're going to gradually launch and deliver all the products based on the new technology platform 2.0. And they're going to achieve a volume of 30,000 units per month. That's a huge increase. If you look at its first quarter production, they're forecasting that they're going to have 30,000 units produced in the first all of the first quarter. So they're going to go from 30,000 units for the entire quarter to 30,000 units per month, which could lead to 90,000 units per quarter. So a nearly tripling of production ramp could be coming starting from the second quarter of this year. And then the CFO jumping in to talk about the battery costs. So looking forward on the supply side, this is talking about the supply side of batteries. Several battery suppliers invested in the raw materials efforts, and these efforts are starting to yield meaningful lithium carbonate supply from the second quarter of this year. So from the supply side, we do see a stable increase starting from the second quarter of this year. On the demand side, in 2022, China's EV sales almost doubled. Doubled. That's a big increase, right? But if you look this year, they're saying that China's EV sales are only going to grow about 30%. 30%. So what the picture that the CFO is painting here is, hey, you know, if you recall from Basic Economics 101, you've got the price is a function of supply and demand, right? We all remember those charts, right? Supply and demand. Supply, he notes, is increasing materially starting from the second quarter of this year. So on the supply side, supply is increasing. And then on the demand side, you're going from a growth rate of 100% down to a growth rate of about 30%. So the demand side is decreasing the rate of growth. So, he lets you draw your own conclusion as far as the price, where the price of batteries are going to go. But he paints the picture telling you, hey, look, supply is going to increase, demand's going to decrease. So, therefore, prices are likely going to come down for batteries. The next question coming from Paul, asking about what's been driving the weakness in the sales of the ES7 and the ET7 models. Is that due to the hangover effect from the subsidy cards, or is it the supply chain bottleneck? And then asking the second follow-up question, asking about where can we find some efficiency improvements in the expense ratio for the rest of this year. So the CEO jumping in and saying, yeah, we can see for the first 2 months of this year, market demand is not that strong. Is not that strong, right? And he says, I believe the very important factor is the subsidy cuts. So starting from this year, there will be no more subsidies. So in China, similar to here in the US, there was subsidies if you bought electric vehicles. The Chinese government offered you subsidies to make the cost of purchasing that EV lessen, right? And of course, if the price is lower, customer demand increases. Well, now starting in 2023, there's no more subsidies. The subsidies have been cut off, and so that's having a strong impact on consumer demand. That's the primary explanation the CEO gives to the weaker demand for their ES7 and ET7 models. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And then speaking to the efficiency, all he's saying is, all in all, the efficiency improvement where we're more focused on the output and the quality of the output, as well as to the prioritization, meaning prioritizing the higher profit margin businesses, the higher profit margin cars and models, and focusing investment on higher profit margin areas. All right, and the next question coming from YC, asking about the cooperation agreement with CTO and the pricing arrangement with CTO. And the CEO saying, I believe probably around March we're going to launch new battery packs in collaboration with, I think the CalB. I think mentioning I think he meant to say CTO. It's a bit of translation error here, and we're in discussions with CAT-L in terms of the new agreement, but we haven't signed the agreement yet. So all of these acronyms, CAT-L, CalB, CTO, I think they're referring to the same company, the same agreement, the cooperation agreement, but I think this is getting lost in translation here. And then I believe that the discussion direction is basically that the battery companies will start to work in parallel with the auto companies, and we're going to share the volatilities of the raw material costs together throughout the supply chain. So that's been a big issue for the EV companies, is that battery pricing has been extremely volatile, and that's making it difficult for the EV companies to manage their business, right? How can they price their products if they don't know what the cost of inputs are going to be and they're so volatile, right? So you can't really run a business effectively in that way. So these agreements are going to be put in place where the suppliers are going to absorb some of the volatility in the price action of the batteries, right? So they might say, okay, you know what, regardless of what the price of our inputs is, we will sell you the batteries at this cost, right? Even if it's going to mean that we absorb some losses in the short term, we expect to make that up when prices fall in a future quarter. So the EV companies like NIO are trying to make arrangement with the battery companies to offset some of that volatility, to offset some of that risk in terms of changing prices. So, and I'll end with this final comment here. And this, I think, is crucially important for NIO stock investors, that the CEO and the founder is saying the overall target for the company is that for the growth, we will aim to achieve a break even for the company in 2024. So as early as next year, NIO could be break even. And so the losses on the bottom line could be over for this company by next year, which is a big, big statement. The company's been losing a lot of money on the bottom line. It's investing a lot of money in rolling out its battery swapping network and battery charging, rolling out new models, investing in manufacturing capacity. So all of that considered, the company expects to be break even in 2024. That would be huge. If it actually achieves this target, it would be huge. It would be a big, big news for investors in NIO stock. So that's something to look forward to. And that's certainly something I'm going to be monitoring every single quarter when the company does give us updates. I'm going to be monitoring this progress towards profitability. I'm going to be looking at what management says. If they change this forecast, do they push it back? Do they say 2024 right now? And then 6 months later, do they push it back to 2025? I monitor those kinds of things, right? If you give investors a target, how good are you as a company in meeting those targets? Or do you give investors a target and then delay the target and push it back and push it back and back and back and keep making these ambitious forecasts? I'm not going to mention any name. Tesla making these huge ambitious targets for full self-driving and all of these other things, and then pushing back those targets consistently to the point where investors cannot rely on your forecasts and your targets. Is NIO going to be the same way? Or are they telling us 2024 and they're going to hit that target, or maybe even beat that target, right? That's big news, right? That's impressive if they can set targets, achieve the targets in the timelines that they set them on. All right, so that's all I've got for this video. As always, I truly appreciate your viewership. And if you like this video, I'm going to link to a couple of other videos at the end of this one that I think you might enjoy. So please click on one of those and I'll see you over there.